Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for July 18th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to be in the same holding pattern we've been in over the last few days. Overnight trading here, we're still trading the 2158s, holding above the 2120s. I mentioned before that once we do find rejection up here, it's likely going to be a quick retest back toward prior resistance at 2120. So whenever we finally do see rejection up here, you're likely going to see a quick move in at 2120. Any push into this zone will likely be defended, at least on first attempt, by bulls for a shot at returning to highs. Any failure to hold above 2120 opens the door back toward composite VPOC at 2075 half. So right now, just kind of in a holding pattern, nothing really to do right now. If this market's going to continue to push higher, one thing I would look for is how is price going to respond to levels below 2140. If we see a push below 2140 early in the week here and there's a rejection, that could be a quick move for a push into 2180 and beyond into 2200. Look over here, for example. Right before price rallied here recently, you had to come out here, take out recent lows. There was a rejection tail formed here, and then you saw the next big push up. It was because price was not able to establish acceptance below those new lows, and instead those sellers got trapped and a big squeeze occurred. So watch 2140 here early in the week. If there's a rejection here, you could be looking at a move the other way. But for right now, we could be looking at early sideways movement here ahead of the next key move. As long as price remains above 2120, there's still a short-term upside price discovery phase that remains intact. If we look at the intraday time frame here, let's go down into an intraday chart here. Basically, prices are holding at highs right now. Short-term, we have a gap up, and holding 2154 is currently bid. Up here, offered is prices above 2162s. And so right now, we have a very clear range right now that is formed in overnight trading. 2154, 2163. The idea is to fade the early edges, at least early on. So if price comes down here, we're going to look to fade it back up. If price comes up here, look to fade it back down until proven otherwise. Eventually, a breakout from this range could spark a nice move. But right now, with a flat VWAP, the idea is to fade the edges until proven otherwise, at least early in the morning. Now, if we take a look here at crude oil, here's crude in a daily time frame. Basically, crude really, again, another holding pattern here. Nothing really to do right now. We talked about how 4588 was very, very important because it is a micro-composite VPOC over the last couple of years. This is a one-year composite here at 4560. So basically, on a 1 and 2 year basis, value is right here. And that's why prices are just chopping around value. And I've mentioned it many times before. There's not a lot of edge when you're trading around value because the market wants to trade those prices. So you're going to see chop back and forth, back and forth, back and forth until the market is satisfied at that area. And then we're going to see the next move away from it. Right now we have 47s as a key level on top, 4450s on bottom. Above 47s could lead to more strength here, but again, you got to watch it very closely. And until you see movement outside of this range, you're likely going to see market participants fade the edges yet again. So crude oil on a swing basis right now, really nothing to do just yet. On an intraday basis, let's take a look at the intraday time frame here. Crude oil early on in overnight trading attempted to push into 4680 and has since seen rejection and lower highs ever since. Price broke the range to the downside, 4650, and has since continued lower here into 4614. So right now, given the fact that prices have broken below 4650 after a rejection up here, I would watch 4650 very closely. That's about where VWAP is as well. Minor LVN here. I would say any push into this zone could offer an opportunity to sell for a drop in the 5-day VPOC at 4561. So we could be looking at more short-term weakness ahead. I'd watch 4650. All right, let's take a look now at gold futures. Okay, here's gold. If you pop into the daily time frame here again, Gold has been very volatile, a lot of whip back and forth here in gold, but overall prices have continued to remain above 1306, 1307, that key zone right there, 1310, right? That's a major area of resistance and support now. So prior resistance here, here, price went bid here, it defended here. So that's a major pivot in the charts. That's going to continue to be the level. So for me, there's nothing really to do in gold just yet, but this is an action item here. When price reaches this zone, 1306, 1307, 1310, with the LVN and the major separation between price distributions, this could be a fantastic area to defend for a shot at pushing this thing back toward 1370 to 1380. Any failure to hold this area opens up a return back down, perhaps back toward composite VPOC at 1243.40. All right, let's take a look now at the NQ. Here's the NQ. This is the daily time frame. Again, 45.50 has been very important. You can see this key level on the charts here. If we back out of this thing a little bit, you can see 45.50 has been support after it had first been resistance many times. Now price is attempting to hold above that zone. Here's the deal. If bulls are not getting paid every time there's a new high up here, you're going to see rotations back down, and all of a sudden you form a little box here. And this box can lead to a major reversal if those bulls that are defending the 45.50s aren't getting paid. So this is going to be a very important zone to watch. If 4600 continues to be rejected, I'd watch for stops below 45.50, because if they become triggered, you could see a move back down toward value at 43.28. So this is going to be very important. If price is going to continue higher, we're going to see a rejection of prices below 45.50. So if price drops down here and can't hold and pops back above it, that could be a surefire idea that we're going to at least test for new highs above. Right now, nothing really to do again. 45.50 up to about 46.10 is the trading range right now. Look to fade the edges. The fact that we're rejecting off 4600s could lead to a short-term rotation back into 45.50, but that's something we can drop into the intraday time frame to look a little more closely at here. So here's the intraday, and again, 4600 has been the zone where bears have been defending, right? Here's 4600. You can see right now it's been a two-way trade. Bears defending up here, bulls defending down here. Back and forth we go. So until price breaks out of this range, we're looking to defend the edges. If price comes into 4600, bears want to fade it back across the range. If price comes down into 45.75, bulls want to defend it and bring it back across the range until a violation occurs. If there's any failure to hold above 45.75, look for a push back toward 45.50, and that's going to be an important support zone to watch intraday. I would believe that bulls want to defend the first test. Any failure to hold it could be significant. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and happy Monday.